South Africa's new inflation target could be unveiled soon and will be announced by Finance Minister Enoch Godongwana as soon as is practical. That's according to a statement by National Treasury and the Reserve Bank. The announcement follows months of technical work on whether to lower the current 3 to 6% target. The SARBs called for it to be lowered for the past 4 years and effectively shifted it to the lower end of that range in July, drawing pushback from Godongwana. Treasury now says it recognizes the benefits of a lower target and that the recommendations will be presented to the Minister and Governor Lesetja Kganyago before a final decision is announced. And gains in the manufacturing sector have been short-lived. The ABSA Purchasing Managers Index has fallen to 49.5 points in August, putting the sector back in contraction territory. That's after July's reading of 50.8 points reflected expansion for the first time in 9 months. The latest reading shows that both domestic and export demand is under pressure, but it's not all bad news. The average PMI for the third quarter has come in just above the neutral 50-point mark, which indicates expansion. That compares favorably to the second quarter reading of 45.4. SA's agribusiness confidence edged lower in the third quarter. The AgBiz IDC morale indicator slipped by 2 points to 63 during the period. This marks the second consecutive quarterly decline as disease outbreaks and trade frictions weighed. AgBiz chief economist Wandile Sihlobo says the recovery of SA farming will likely be uneven in 2025, with livestock under pressure. He's also pointed to heavy reliance on export markets and the need for greater diversification, but has stressed that existing market access across the EU, UK, Africa, Asia, the Middle East and the Americas must be protected. Bidvest has posted flat annual earnings. That's despite a stronger year-on-year performance in the second half. A final dividend of R4.53 has been declared. This is up 1.3% year-on-year. Moving forward, the diversified industrial group says it is sharpening its strategic positioning and agility to ensure more efficient operations and a cost base that aligns with the current environment. A turnaround at RCL's baking division has given rise to higher profits. The food manufacturer has reported a 28.5% increase in annual headline earnings per share from continuing operations. It says an improved product mix, better production efficiencies, and a more stable power supply also contributed. Given the strong results, the company has rewarded shareholders. A total dividend of 60 cents per share has been declared. That's nearly double what was paid out last year. Santam has posted higher profit at the halfway stage. In the 6 months to end June, headline earnings per share increased 19%. That's as all its businesses exceeded their prior year's performance. An interim dividend of R5.60 has been declared. Looking ahead, Santam says easing pressure on disposable income and its strategic focus on higher growth areas will support the firm's growth prospects during the rest of the year. Higher hake hauls helped Sea Harvest reel in strong half-year results. The fishing group says that, along with higher prices and efficiency gains in its hake unit, supported a 34% rise in revenue, and its headline earnings per share nearly doubled to 95 cents. Sea Harvest has also pointed to solid volume growth in its pelagic business, but its abalone business took strain from weaker demand in Hong Kong and China. Looking ahead, management says it remains cautiously optimistic about the second half, underpinned by firm demand for hake and horse mackerel. ArcelorMittal SA has told its employees that attempts to save its long steel business have failed. According to a memo to workers which has been seen by Business Day, the steel major will wind down its long steel business at the end of this month, and that will result in 3,500 people losing their jobs. This comes despite attempts by the firm, the government and the Industrial Development Corporation to salvage the operations. AMSA says that standing structural problems remain and are at the heart of the closure. those being rising imports, limited tariff protection, very high electricity costs, and the worsening performance of the local rail system. Blue Label has unveiled plans to restructure its stake in Cell C, paving the way for a possible JSE listing of the mobile operator. The group says it's entered into binding agreements to simplify Cell C's balance sheet and capital structure. Steps include converting debt into equity, transferring assets into Cell C, and consolidating shareholdings. The overhaul is designed to position Cell C for a potential separate listing, subject to shareholder, regulatory, and market approvals. Blue Label will also implement a management incentive plan for Cell C executives. The company emphasized that this is not yet an intention to float announcement and that the listing decision will depend on conditions closer to the time. Solid, that's how Sun International has described the performance from its business units during its half year. And as a result, the gambling firm expects its headline earnings per share to be as much as 61.6% higher. The trading statement from the company also notes that the group is in a strong financial position as it continues to de-gear. Debt has decreased from 5.2 billion rand to 5 billion rand during the period. Sun International will open its books next Monday. Harmony Gold has cleared a major hurdle in its takeover of MAC Copper. Shareholders of the Australian miner have voted in favor of the $1 billion deal. MAC Copper owns the high-grade CSA copper mine in New South Wales. The deal has already been cleared by regulators in South Africa and Australia, with Harmony expected to take control by the end of October. Harmony says the acquisition will add around 40,000 tons of copper a year to its portfolio, boost cash flow immediately, and strengthen its portfolio with more resilience and geographic diversity.